Hi there, Simon Atkins here from Jones Realty and Projects. Today I'm going to be chatting to you about investment properties. So if you're in the market and you're looking for an investment property, or you're thinking about putting your toe in the water and getting into this market that's been doing extremely well over the last 2 to 3 years, and of course we're expecting that to continue for some time yet, probably another 4 years or so, then this information could certainly help you out, because it's going to show you how the cash flows would work on a couple of different incomes. So depending on whether you're on, say, around $100,000 or $200,000. So please just understand that these are just modeling scenarios that I have. I've got certain software that runs some models, and it allows you to get a very good idea as to how the cash flows around a property work. Because I always say to someone, if you buy an investment property, the first thing that's going to hit you in the face are the cash flows. Obviously, we want to get the growth over a period of time, but the cash flow is the thing that we want to understand from the beginning. So we have a property at the moment, which I'm going to talk about today, and that is for $866,000. I'm going to put it all up on the board here. Oops, 866K, okay, for a brand new 2-bed apartment. Now, the fact that it's brand new is super important, because it means that you can not only depreciate the structure of the apartment, but you can also depreciate all the internal fittings and fixtures, which you can't do for older property or second-hand property. Okay, so that certainly helps your cash flows as well. So I've scribbled some numbers down on the paper here, and I'll show you on the board how this would work out. So let's assume, like, if you're on 100,000 or you're in that tax margin, this is roughly how it could work for you. Obviously, you might have other things that you're deducting in your income. So this is just, like I mentioned, a scenario and a model. If you're on around $100,000, so first scenario here, 100K. So we're going to have money over, this is over a 12-month period, so over 1 year, we're going to have money coming in to our bank account here. This represents our bank account. And we've got 2 lots of money coming in. We're going to have 2 lots of money going out as well, okay? So the first thing that comes in that we're aware of is the rent. I'll just put an R there for that. Now, this property would be expected to rent at around about $950 a week or thereabouts. We've had it assessed by a property manager. So that would go in here, and that is over the course of a year, it's income of $49,400. Okay, that would come into your bank account over a 12-month period. On the other side here, we've got your loan repayment. So if you're borrowing, obviously some people might pay cash, or they might do something else or borrow part of the cost of the property. In this scenario, it's fully borrowed, okay? It's assuming that not only have you fully borrowed the amount of the property, but you've also borrowed the costs involved, such as stamp duty. So you can do that, of course, if you've got enough equity in another property. So the loan that I've worked out is on a 6% rate, interest only. So interest only, a lot of investors do interest only because of you can deduct all of the interest of the loan. So in this case, I'm doing interest only. So the interest repayments over a course of 12 months would be 54,341 at 6%, and they're likely to become lower than that, and they might even be a little bit lower than that now, but around about there. So the other thing that we have to have is not just loan repayments. We have coming out of our account, we also have expenses during the course of the year. So the expenses being obviously things like rates, strata fees in this case, because it's an apartment, and those types of things. So we've made an allowance, but I also allow for property management fees. So because these are all the things that you're going to have as expenditure during the course of the year. So expenses, it worked out 12,174 as your expenses. And then over here, we have something else that comes back in as cash flow other than your rent, and that's your income tax benefits that you get. So you may buy in a different structure, a trust or something like that. Most people would buy them as a personal name. I'm assuming this is just bought in your own personal name, and therefore you can claim against your own personal income. So as I mentioned, this is on 100,000 gross income. And you would expect to get over the course of the year, given these kind of numbers here, you expect to get around about something just over 16,000 back in tax, income tax, or thereabouts, something around there. Like I said, it's just a modelling. So what that would mean, if you've got these two numbers coming in, your rent and your tax savings that you've got because it's an investment property, and then you've got your costs going out, and that would mean this property, particular property, would cost you overall about $27 per week. Okay, so the price of, well, these days it's probably the price of 2 cups of coffee, but probably more likely the price of about 4 cups of coffee would cover this property going forward or thereabouts. Okay, so that's one scenario on $100,000. Now we can see how this changes a little bit if you're in a higher tax bracket. So if I was to change this 100,000 to 200,000, and then some of these numbers change a bit. Now, obviously you're still going to get the same rent and you're going to have the same outgoings in terms of your loan and in terms of expenses. That's not going to change. But the thing that will change will be that the tax that you get back here. And in this scenario, you would be getting back, just rub this out, you'd be getting back 19 or thereabouts 19,557. Okay, again, just modelling. It's not exact, but it'll be somewhere in that probably ballpark number. Okay, and that means instead of it paying, you having to pay $27 per week to keep the property going, it's going to pay you around about $27 per week. Okay, which means that's approximately $1,400 or a bit more than that per year that you make in cash flow on it. Okay, so if you want to understand any more about this and how this works, maybe not just for this property, but for other options that we have, and we've got lots of different options across the board, like I mentioned, this doesn't show you depreciation. We can talk about depreciation as well because that's one of the big parts of this. It has included depreciation in these calculations that I've used here, but if you're looking to do this, it's certainly a lot better than, for example, if you're taking the capital growth into account, people trying to just invest their money, particularly as interest rates are coming down. So if you'd like to know more and you'd like a free consult with me, we can certainly sit down and go over some numbers for you so you fully understand the property before you get into it. Okay, I hope that helped and I hope to speak to you soon.